In the meantime, inflation keeps rising, stocks are falling, and the phone is ringing for our next guest, Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Nice to see you, old friend. I'm sorry it has to be under these circumstances because, Doug, stocks have had a terrible year. We're moving into this new environment for investors, away from high-growth tech, which really made a lot of people rich over the past decade, now into this new, more uncertain environment. What are you telling your clients? I'm sure you're the old rebalance. You always need to be rebalancing, right?
That's true. And in fact, what happened is the S&P got more and more into tech itself. So people, they had their S&P funds and then they added on additional tech names. And so we've seen that movie before. We saw it in the late 90s and early 2000s where people super loaded into tech. And then there was a shift away from that. This time, what you should have been doing, and hopefully what you can still do, is take a look at history and say, if we're not in a high growth environment anymore, and we're in a high interest rate and a high inflation period, those same names and those types of companies don't do as well. And you need to look elsewhere. And those names are names like energy, which you just mentioned. I always think about everybody wears two hats when they walk around. You're a consumer, but you can be an investor. And so when you have pain at the pump, the way you offset that is to make some money by being an investor in those companies that are charging that money. That money's coming back in profits and translating into earnings, which translates into a higher stock price. So that's the way to play that if you have money to invest. As we're all getting squeezed on all of these higher prices, maybe you have a little bit less to invest, and that's part of a problem.
Doug, what's the number one question people are asking you right now? I have many personal questions for you, but what's the number one question you're getting these days?
I think the number one question is, is it different this time? And that's the four biggest words that you can make a mistake with is this time, this time is different. And it's not different. You just need to not act like you've acted exactly the last couple of years, which was easy in a different environment. So you have to take a bigger step back and say, look, if it's your 401k money and you're putting money away that you don't need for 10 or more years, then, these are the things you actually want to have happen. You want to have a 20 or 25 or maybe even a 30% correction into a recession. Those things are terrible while you're living with them, but when you're adding into the market, those are good things in the long run. The trick is, like a year ago or earlier this year, as you get closer to your goals, you need to wind that down. And so the big problem is people that needed money this year or next year should have been exiting the market at the all-time highs.
That's not what I wanted to hear.
So
That's exactly the opposite of what I wanted to hear.
So you're saying that woulda, coulda, shoulda is not an investment strategy?
No, definitely not. However, if that time will come back again, it's going to look a little bit differently in how long it takes. But when it does, that's how you learn, right? So you learn the lesson that the next time, maybe I'll take some chips off the table. You just can't hang. The buying things is the easy part. We can find good things we like even now. The hardest thing for investors to do is to have a sell strategy.
Yeah.
When do you get out?
Yeah.
And so those are the things that maybe you learn, and maybe you take some profits, which is not the worst thing, and redirect that money elsewhere.
I know. I mean, I don't know if I have a chart of this, but if you go back in the S&P 500 back to the last big crisis, if you had, a stomach of steel, you made a lot of money. That's this year. That's also a stomach of steel, but in a different way. So over time, investing in the stock market pays off. And when you dollar cost average, meaning you're buying stocks all along the way, it is good when the stock market falls. I know that doesn't make anybody feel good this morning. Let me ask you about something that's boring, but maybe a strategy.
Something that excites Christine a lot.
DIY strategy. These I bonds.
Yes.
You can't call up a broker to do this. This is something that just, we can just do ourselves. And they're returning something like more than 9% interest. Well, tell me about that.
That's correct. So everybody can do this themselves. You can actually put up to $10,000 per person. You can actually do more if you read online about how to do it with a refund, but you can do up to $10,000 per person, but you have to do it directly with treasurydirect.gov. You open an account and you can put some money directly with the government, and they're inflation bonds, so they're tied to the inflation rate. So again, thinking about two sides of this, I'm paying more on one side. How do I participate on the cost of inflation by making money off of it? This is the way you do that. And so these I bonds are guaranteed by the US government, and the yields are over 9.6 right now. Now that's going to adjust in October with inflation, but inflation doesn't look like it's coming down. Those famous words of it being transitory or the Fed saying we're going to be back down to 2% inflation by the end of the year is not happening. So there's an opportunity here, and you can get on there and you'll get that high interest rate. A couple of caveats: you can't take it out for a year. So that's the first one.
Not
but if you
liquid.
have a year, it's not as liquid in the first year, but after that, and there's a small penalty if you don't keep it for 5 years, but the penalty's almost nothing. It's 3 months interest when these rates are this high. And so we definitely recommend that everybody do something with that. Try to get on the other side. If I'm paying all this over here, how do I get something on the other side, thinking, wearing that other hat, and that's the way to do it.
Did he answer your questions?
I went into this feeling okay, and now I have more questions, but we can talk about that offline. Doug Flynn, thank you so much. We'll have you back very soon.